Hi there, folks. Sean Broderick. I'm at the PDAC 2017. I found another great company and one you're really going to want to take a close look at. This is Metalla Royalty and Streaming Companies. Now, we all love streaming companies, right? Because they never have to send miners into the ground. They have very low employee base, and yet they can still reap the benefits of rising precious metal prices. But we also know that the big streaming companies, they're competing against each other so much that it's really lowered their rate of return on what they have to invest. Well, Metalla is a very small company that's very good at working around the market and picking up the things that the big guys aren't looking at, and that's really working to their benefit. Right now we have Brett Heath. He's the president of the company, and he's going to explain to you what the company is up to. Brett, could you please speak to my viewers?
Yes. Well, thank you, Sean, for having me here and letting me speak to your viewers about my company. Right. So what we're focusing on here is really off the success of these big streaming and royalty companies. And I'm sure a lot of you have heard these names, Franco-Nevada, Silver Wheaton. These are multi-billion-dollar companies that have been extremely successful over the years on executing this business model. And because of their success, transactions on the smaller side are really not economic for most of them, at least when you look at their total cost. All of these companies, including ourselves, we run the same really process on executing these transactions, whether they are a $5 million transaction or a $500 million transaction. And when you have a really big team, it's a bit more expensive when you're looking at smaller deals. So what that does is it makes it less economic or less attractive to the big companies to focus on these things. So that's where we come in. We're focused on deals between $2 and $10 million of transaction size. And we've got two prongs to our business. The first part is acquiring royalties, usually existing royalties that are in structures that are either private vehicles or exploration companies, or really any type of structure where the companies or the owners of these royalties aren't receiving full value. So we like to partner or buy these types of royalties that are existing that we think will be worth more in a very pure, concentrated royalty and streaming company that's focused on only gold and silver.
Just to clarify, now that might be a royalty on a large existing project that a large miner has.
Exactly.
But this private company has this small royalty left from when the whole thing started,
Exactly.
And they just aren't really getting any value for it.
Right. So these are lots of things that we look for, and because it's really difficult for a small company to ever get a royalty from a major operation, because if you can't write a $500 million check, then a lot of times it just doesn't move the needle as well for the big mining companies, the Glencores, the Goldcorps, the Rio Tintos. You have to have a lot of money to play for it, and the big guys it's very competitive at that end, and that's just not the business that we're doing. But we have been successful at finding royalties on some of these major assets that are a little further out from production. So that's just a different way that we approach to acquiring and building our business. And the core part of our business is on the streaming side. And again, what we're looking to do is to acquire either producing or near-term producing streams, focused only gold and silver, and that's between 2 and 10 million. And again, these are companies, these are deals where they're just perhaps a little bit too small to make sense for the big guys to spend time on them. And what that does is that allows us to come in there in a much less competitive environment and get much more attractive returns or internal rate of returns on these deals. And we're able to, we have a formula and a system to procure these things, and we're looking to grow our company here quite steadily here over 2017. We press released a producing stream that we that we signed an LOI with, and we're looking to move forward on closing that. That's what the producing operation is going to be, immediate cash flow. And then on the royalty side, I guess just to mention a couple of the assets is royalty on the extension property of Goldcorp's Hoyle Pond Mine. Big asset for Goldcorp. It's in the Timmins camp, in their Porcupine camp. And this is on the extension of the existing asset. So at depth, not a new mine, but at depth, if Goldcorp continues to mine this, eventually it'll cross over to the next property, which is the extension property of this asset. And we think there's a high probability of that happening because they made a major investment into the asset in 2016. So,
okay, just to recap what you have been saying and like what you told me earlier. Now, you have picked up royalties on like land packages that are extensions of existing producing mines. They just haven't gotten there yet.
Right.
So it's kind of the long-term planning. People really weren't, receiving any value for these royalties. So it was smart for them to sell because you can see a little into the future.
Right.
You can see how much money you can get on those things.
Right.
And now you have just inked a deal for a producing stream of silver, and that's going to provide a lot of cash flow to your company. How much cash flow per year?
Right. So this will give us somewhere between, most likely the range, and this is based on the historical production of this asset. This asset's been in production for the last 4 years. Last year, it did a little over 87,000 ounces of gold. And the byproduct, which is the silver, is probably around 125 to 150,000 ounces annually. So we're acquiring 15% of this stream that's existing, and that's going to give us the right to buy somewhere between 19 and 22,000 ounces of silver a year, and we're able to buy that silver at 10% of spot. So at $18 silver, we're going to be paying $1.80 an ounce. At $40 silver, if that ever comes again, we'd pay $4 an ounce.
Right.
And we lock that price for the next 10 years. And so these are the types of deals that we're looking for. So we want to provide direct leverage to gold and silver prices to our shareholders. And our goal here, our end goal, is to hopefully pay a dividend. We're working on keeping our cost, our structure very, very tight. And, we'd like to create a vehicle where, we can pay out, call it 50% of our free cash after G&A directly back to shareholders and have a real, dividend connected to gold and silver type of company, where the big guys, they could easily pay a sizable dividend, but they just don't.
Right. Well, we'll also mention there's only two full-time employees in your company, right? Which keeps costs way, way down.
Right.
And then they just job the rest of it out. They'll probably make 3 to 4 acquisitions per year, right? Or at least so that's your goal?
On the streaming side, we're looking at doing somewhere between 2 and 4 streams per year. On the royalty side, there's not really a number I can give you, but we're constantly looking at royalty things. I think we'll add at least 1, if not 2, royalty transactions a year as well. So,
right. And your plan is to make all of these accretive, so those people who hold the shares now won't be really losing anything in the deal.
Exactly. So kind of one of our mandates here is to do accretive transactions. And what that means is that, to finance these transactions, we need to raise money. And normally doing a financing is a negative event for most companies in the mining space. But it's actually a positive event for us because what's happening is you're getting 2 things. You're getting, one, diversification. So the shares that you own are going to be diversified off more assets, more gold and silver, hopefully producing assets, but also valuable royalties. And then 2, the metric that we can look at it on a, cash flow per share basis or a gold ounce per share basis or a future gold ounce per share basis is going to increase every single transaction that we do. So for the shares that you have, you're actually not getting diluted, but every transaction we do, even though there's more shares out, the actual cash flow per share or future cash flow per share after each transaction on the existing shares will go up.
Great. So symbol is MTA in Canada, EXCFF in the United States. Keep your eye on Metalla Royalty and Streaming because this looks like a company with a bright future. Thanks very much for watching. Thanks very much for speaking to my viewers. You folks stay tuned. There's more coming for you from the PDAC.
Thanks for having me.